All right, everyone, welcome back. If this is your second time coming back to our Lunch and Learn webinar series, and if this is your first time, welcome. Today, I am your host, Meyer. I'm the Senior Relationship Manager here at Zacks Institutional Services, and today we're going to be talking about the screening tool that we have in Zacks Research System. This is a tool that will help you build screens for various purposes. You can use it to build your overall watch list, or you could build it to create a general universe from which you can then screen down using, the factors and other variables that your firm employs when picking individual stocks. So today we're going to take a look at some of the basics of screening, and then as well as dive into a little bit more of the advanced tools that are available in screening as well. So let's get started. So from the homepage of ZRS, you're probably familiar with this already, but we have our screening tool right here that you can click onto, and that will launch our screener. And the first thing that you'll notice is it's displayed in a way that is easy to quickly view the various different databases that are available. So that's the first thing that you'll see here on the left-hand side are the various databases that we have. Some of them are, geared towards market data like price and volume data, as well as other types of snapshot data like ratings and earnings estimates. Other databases are geared more towards pure financial statements. So across all three financial statements, you can, screen on those factors as well. And other databases are pre-built for calculating ratios. So we have an entire database dedicated to all financial and valuation ratios that you can then browse through over here as well. So we've tried to make this such that it's easy to toggle these different databases and be able to then screen, based on that.
Muted.
So what we can start off here is a general screen. And what we're going to do is just basically create an investable universe. So the first step is, let's just take an example. Let's say your benchmark is the Russell 1000. So what I'm going to do here is I'm going to pull in a ticker list that I created, which just simply contains the Russell 1000. And so I'm going to go up here to Portfolio and go to Open Ticker List. So we will begin with a list that was already sort of our general broad benchmark that we're going to be selecting from. So here is that Russell 1000 composite. I'm going to go ahead and select that. And as you'll notice, and as we continue to build screening filters, you'll see that each of those criteria are going to be compiling down here at the bottom. So just make note of that as well. So we're going to begin with the Russell 1000. And then what we're going to do is just, put a very general filter, which is that we want to screen out any companies that are unprofitable. So we're going to go ahead and go under the income statement, and under this, the trailing 12-month section, we'll go ahead and then select our net income before NRI. That's non-recurring items. Those are, the sort of the, the brushed up, number that excludes extraordinary items. So I'll just go ahead and double click that. And as you can see here, you can now select whether you want something greater than or less than or equal to, as well as some of the, as well as more, detailed functions, which we'll get into in a bit later. But for now, we're just going to say we want net income just to be greater than 0, just to create a broad sort of investable universe from which to pick from. Okay, so we added that to our criteria. Now let's say we want, stocks that pay a dividend. So it can be any dividend, even a quarter or a penny, but just, stocks that pay a dividend. So we'll go under here under ratios, and we want to say the dividend yield, has to be greater than 0 as well. So just as a broad example of how, one might go about building an investable universe. Okay. Now we want to do other basic filtering. Let's say we want to pick companies that have, an expected long-term earnings growth rate as well that's greater than 0. So we want to screen out any companies that are, clearly experiencing difficulties, at least based on the consensus of analysts. So we can go under here to the growth section, and here there's EPS projected. And over here, we can say the next 3 to 5 years estimated EPS growth. That's our long-term growth forecast. Again, that's coming in from the consensus of analysts that cover the company. And we just want to, just give it a very basic requirement saying that it has to be greater than 0. Okay. And let's do the same thing for revenues too. Earnings growth is great, but what if, the top line is contracting and they're simply, keeping that earnings growth above 0 because they're cutting costs or they're squeezing other parts of the business. So for that reason, let's also put in a requirement that says that, future revenue growth is also looking, decent. So under sales, we have this 2 years ahead sales growth. So that's taking into account both the current fiscal year as well as next fiscal year based on analyst estimates. So we'll just double click that item and say we want that to be greater than 0 as well. Just a very basic screen again. We're just filtering out, the obvious, companies that we want to avoid rather than, being ultra specific as of right now. And now let's do another quick filter, which is a sort of a current ratio. We want companies that aren't experiencing any kind of liquidity crunch. So if I go under liquidity and coverage and we say the current ratio, we just want that to be greater than, let's just say, 0.5. Again, very basic stuff, greater than that. So that means that current assets are at least half of their current liabilities, is what we're saying here. And then if I go ahead and run this here, we started with the Russell 1000, and let's see how many stocks are passing now. So that brings us down to 439 stocks. And as you notice, I just ran the screen, and the default way that the screener presents the data is that it's sorted by industry, and then it also displays the items that we actually screened on as well. So it creates a nice little report that you can then use. So this creates a very workable universe of companies. We just went from 1,000 companies down to about 439, and we didn't even put in any, super specific criteria either. These are very, very basic criteria. So again, the screener is a great tool for you as a firm to be able to come up with an investable universe from which to pick from. So there is this, that's the utility behind this. Now let's get a little bit more specific. Let's get a little bit more creative. Let's say you want to now continue building a criteria where you want stocks that have a low PE ratio and yet a high return on equity. So now we're getting a little bit into, if you're familiar with Joel Greenblatt, the founder of Gotham Capital. This is his, bread and butter, looking for low PE or low multiple stocks, but, companies that still generate high returns on capital. So we can go over here, and under the PE section, we have this PE using 12-month forward EPS estimate. If I double click this now we can do the same thing that we just did a minute ago and just specify a value. Like we can say, okay, I want all stocks less than a 15 or 20 PE. But let's not do that. Let's do something a little bit more advanced. Let's say we want to pick all stocks that have a PE that is less than its sector average. Okay, so the PE has to be less than the sector average. Now that gets a little bit more, sophisticated. So what we want to do here is, instead of giving it a value, we want to click on this group radio button right here. Okay, so that will then compare the stock's PE, forward PE, to a specific group that you get to select. And right now it defaults to the S&P 500. You could use that if you would like. But I'm going to go down and select the sector instead. Okay, so that gets a little bit more apples to apples rather than S&P 500 overall. We want, to pick stocks whose PE is less than the sector average on a market weighted basis, market cap weighted basis. All right, so we'll go ahead and do that here. So now we're getting more into relative screening rather than absolute screening. So far we've been doing only absolute screening. Now we're doing relative screening. So here's our PE factor. And now let's look for that return on equity. You can see that up here under the return on investment section. Here's our ROE. We'll select that as well. And we're going to do the same exact thing. We want to benchmark it against a group. We want the sector in here. And this time we want it to be greater than. Okay, so the sector average. You can make it an actual equal weighted or median weighted. I'll just go with the market cap weight. Okay, so now if we select that in here, now we have a really nice list of criteria. We have a very, very basic criteria, essential liquidity and growth fact filters. But now we're getting specific with low PE stocks relative to sector averages, and yet companies that are also doing high returns on equity. All right. So now if I go ahead and run that screen again, just hit this query button to run it. If I do that now, we actually cut down that universe by almost, quarter, by almost 3/4 now. We're down to 129 companies here. So now this becomes a very, very reasonable list of stocks to work with. And this can help you create ideas, generate ideas. You can, effectively print this off or export it to Excel, save it as a spreadsheet. You can print this so that you can walk into a board meeting with your investment committee, or distribute it to your colleagues and walk through these companies one by one, because now it's a much more workable list rather than a large universe. You can also do a lot of reporting with this tool as well. So let's say, these are just the items that we screened on, but let's say you want to add items that to the report without changing the structure of the filters. So let's say to this report, you want to see, market cap. So we can go over here under size and share volume. Here is market cap. So this time, instead of double clicking it to select a value, we want to instead right click it and click on add database item to report. So what that does is that it just drops it into the report definition, but does not run a filter on that specific item. Okay, so that helps you, build a more detailed report without having to alter your screening, criteria. And let's say we want to add a few things additional, like the Zacks rank. You can see that here as well. It's good to see that just as an additional filter to your, to your existing, investment criteria. So we'll add that to the report as well. And let's also look at a few valuation metrics. We can look at price to book as well as EV to EBITDA. Okay, so I'm just adding these to the report here, not really doing anything to the screen. So if I run this again, we're going to get that same list of 129 stocks, but this time we'll also get the additional data points that we asked for right here on the list. So it's very, very easy to run both screens and reports using this. And then again, everything in Zacks is open source. We don't like to keep anything behind lock and key. So all of this is exportable to Excel. You can then manipulate it in Excel further according to however you'd like to do it. You can also filter, create a sorting mechanism here, where let's say you want to sort this by, instead of industry group, you can sort it by sector grouping. So to do that, you want to go up here to data and go to organize/sort. And right now we have it according to the medium industry group. So those are your industry groups beyond sectors. But let's say you want to group it a little bit more generically, so we can go to sector, right? So that would be our first sorting. And then from there, we want to sort it by the, let's just say the 2-year forecasted revenue growth. We'll do that here, and we'll keep that in descending order, so your best stocks are at the very top. I hit that. Now we have that same list of companies, except now we're broken it down by sector, and you'll see the companies with the best expected revenue growth are at the very top of each sector grouping here. So Las Vegas Sands, out of all consumer discretionary stocks that are passing our filters, Las Vegas Sands is the one that actually has the best forecasted revenue growth right now. And then for eBay as well, if taking it from retail as well as e-commerce kind of grouped together there. All right, and then you can also do this again if you rather get rid of the sector or industry groupings. You can always go here and sort it by market cap or any of these headers here at the top. So if I double click market cap, right now it's showing us the smallest first, but if I double click it again, it'll now show the biggest first. So we have your Microsofts and your Apples of the world right here at the very top. Now let's say you want to go and save this so that you can refer back to it later very quickly and easily. Just go to the back button. We built this really nice screen here, and you want to be able to refer to it on a daily or weekly or monthly or even quarterly basis. Just go up here to screen at the very top, and then click on Save Screen Definition. And now we can just give it a name there. I'll just call it Test. And I already have a test right now, so I'll just go ahead and replace that. Okay, so that saved the screening definition, right? So this list of criteria, it saved that. But recall, we actually have a report that's slightly different from our screening criteria because we added those additional factors there. So what we also want to do is save the report as well. That way, both the screening criteria to build the list of stocks and then the data points to display are both saved. So now we want to go up to report and say save report definition as well. Okay, we'll call this test as well. All right, and then let's say you want to be able to refer this over and over again so that to make your life a little bit easier and save you just a few seconds of time, what we can do is attach the report to the screen. Okay, so if I do this, that way what this is going to end up doing is that in the future, when you open up the screening definition file, it automatically will know to open up this custom report as well. So if I save this right here, it's going to attach the two together. So I'm going to close this down now, and let's say it's a month from now. I want to rerun that list. I'll just go back into Screener. I go to Screen and then Open Screen Definition. And now I'm going to pull up that test file that I saved. So now it remembered not only the screening the screening criteria, but it's also pulling in that custom report that we created as well. So it's going to run the same exact thing. So this becomes very easy to do on an ongoing basis. Once you do it, then you don't have to do it ever again and again. So that covers basic screening, as well as a little bit of additional sophistication when it comes to relative screening. Keep in mind, any of these items you can screen for by additional types of relative screens. If I go back to that long-term growth rate, you can screen by not just relative to the group, like the sector or S&P or industry average, but you can also screen it relative on sort of an ordinal ranking basis. So what do I mean by that? You can screen by top number as well. So like, for example, we ran the screen and there's 129 stocks. Now you can do a relative screen that says, okay, from that 129, show me the top 20 according to our long-term earnings forecast. Okay, so if I go into here and say on this drop down, we want to show the top number, and then in this bar, I would say 20. If I hit OK there, it once again added that criteria, but it's a slightly different criteria from the one before. Before we just had it, that number has to be greater than 0, but now it's going to say, once all of these screening filters are decided, I want to finally come up with the top 20 from that from the remaining stocks there. So if I run this, we're going to get exactly 20 stocks, and there you are. So these are the companies that, matched all of our filters from before. And then the system is finally saying, okay, I'm going to pick the top 20 out of that long-term earnings, growth forecast. And these are your companies there. You can do the same thing again with other factors too, like instead of top 20, you can say top percentile, so you can say the top 10%, or you can even say, the top 5 in every sector. So it gets really, really sophisticated. Whichever way you want to do it, we can most likely do. So it's all up to you and your imagination. So again, if you have any questions about any of this, feel free to reach out to me or shoot an email to our general helpline, and I'd be more than happy to walk you through doing any of this stuff here. So that's relative screening in a nutshell. There's also another feature that we have in our screener, which is backtesting. So I'm going to clear this criteria real quick, so we'll start from scratch here. So backtesting is a quick and easy way to test your criteria. Now, this backtesting, it is very, very simple. So in order to keep it simple, we require that whatever screening criteria that you want to test has to be from this main database right here, which is our DBCM database. This database contains about 90% of what most folks look for. It contains most of your market data, a nice sampling of estimates and ratings, a nice sampling of growth rates as well as ratios. So most things that you look for are going to be contained in here. So as an example of backtesting, let's just put together a simple strategy where we have, we want to pick from the S&P 500. So we'll go ahead and select that as our first criteria. So we want to say equals member. Okay. And now let's say we want to do a Zacks rank. So that's our earnings momentum model, one of our flagship models here. So this will help us pick companies with good earnings estimate revision. So we want to say that has to be either a 1 or a 2. So therefore, I'm going to say less than 3. So it's basically going to look for all the buys and strong buys out there according to Zacks rank. And now let's look for a little bit of a price momentum filter. So if I go over here to price momentum and say relative strength 52 weeks, this is basically allowing us to find stocks that are outperforming the S&P 500 over that time period. So over a 52-week period, if I say greater than 50, this is a decile ranking system. So all stocks are rated from 1 through 99. So anything above 50 means that it's beating the S&P, and anything less than 50 means it's underperforming the S&P over that time period. So if I say greater than 50, we want stocks that are beating the S&P 500 over the last year. And then let's just do, just for fun, we'll do the 4-week one as well. And let's say we want stocks that are actually underperforming over the short time period, but still outperforming over a 1-year period. So maybe this is a nice, little opening where, stocks with good earnings momentum, they're performing well over the past 1 year, but just in the short term, there seems to be an opportunity opening up. Maybe the stock is getting sold off a little bit. So let's go ahead and save that criteria. So I'll go ahead and click on save. And we're going to call this just, Momo for momentum. Okay, so again, in order to use the backtesting, you want to first select only from items in DBCM. Okay, and then step 2, you want to save that screen, just like what we just did. And then step 3, we can click on this backtest. And now this will allow us to select our holding period. So we can say we want a 1-week rebalance, or we can do a 52-week rebalance. I'll just do a 12-week rebalance. So we basically buy and hold for 12 weeks, after which the system will then rebalance the portfolio and buy the new list at that time. And we're just going to take this 5-year time period here from 2015 to 2020. And the benchmark is the S&P 500. So if I run this, it's going to go ahead and run the screen at every point over the last over the last 5 years. And I think I just hit a little snag here. Apologize for that. Let me try that again. So once you save that, let's go back here to backtest, and let me try that one more time. I apologize for that. Yeah, this should be populating your overall returns. This is actually showing the S&P's returns, but if you run this on your side, hopefully it actually does populate the data. But over here, you'll see a chart of the strategy's performance versus the S&P. And you'll also get a breakdown of the number of companies in the portfolio at each rebound period, as well as each period's return. So you can actually see the performance of that strategy versus the S&P over that time period. So my apologies for it not working right at this moment, but it's a great supplement to be able to quickly understand, what a good overall strategy might be. Again, using items from DPCM. Now let's get into even more level of sophistication. So if I just clear all this criteria again, let's do one last thing, which is let's try to find all companies that rate very highly according to growth, but also very on a low basis regarding valuation, as well as on a high basis, relatively speaking, using ROE. So I'm going to reload that ticker list that I had, just the Russell 1000. Okay, so we're back to the 1000. So what I want to do here is, rather than selecting an absolute number for PE or even a top percentile, let's say we want to create factors or fractiles of that specific item. So I want to go up here to screen and screen by calculation expression. And what I can do in here now is, let's use our PE forward. And there are in our system various ways to be able to create rankings. So this is, entering the world of factor ranking, where you can essentially tell the system that I want, to group all companies in, let's say, 5 or 6 or 10 or 20 fractiles. And I want to pick the ones that rank in that highest fractile. So, this makes everything relative to the entire universe of companies. So now let's say, using the PE example, we want to, for example, use the uniform rank. And what uniform rank essentially means is that it's going to take all companies and group an equal number of companies into, let's just say, 6 different buckets, okay? And we want to, the ranking order, we want that to be ascending. Therefore, the stocks that are in bucket number 6 have, the highest or the most desirable characteristic. In this case, it's going to be, PE. So let's go ahead and select that. Okay, so I selected that item here, and then I want to click on Add Selected Function. And now we don't want high PE stocks, right? We want low PE stocks. So what we want to do here is essentially transform this into an earnings yield. So inside of this little function here, you'll see it says all unranked A6. That's all uniform ranked in ascending order in 6 buckets. Item 646, that's our forward PE. But because we want a high number, we don't want high PE stocks. So we want instead a high earnings yield stock. So we're going to say 1 divided by that. So that makes it a earnings yield rather than a PE. It just basically flips it so that it's earnings to price rather than price to earnings. So we're going to say that there. If I said OK, now I can specify that I want stocks in that highest bucket. So I want stocks in that highest bucket. I can say either greater than equal to 6, or I can say, companies that have, greater than 4, for example. So it'll be, companies that are in bucket number 5 and bucket number 6. So if I hit OK on that, okay, now I'm just going to add this item to the report as well. And if I run this now, this is basically telling me out of the Russell 1000, these are the stocks that rank in the upper, 33 percentile, because we're looking for bucket number 5 and bucket number 6 stocks based on earnings yield. So this is telling us that, we're basically in that top third of all Russell 1000 stocks that have a very, very high earnings yield. And you can see on a PE basis, they're all pretty low. So that's exactly what we want. And you can do the same thing again for, ROE. So let's say we want low PE stocks, but also high ROE companies. So if I go back here and I clear this criteria and I do the same exact thing, I go to ranking, uniform rank, I want to select this item, go to ascending order, number of fractiles is 6, add selected item or selected function, and I can just keep that as is and then say OK. And I want to do the same exact thing greater than 4. So that's telling us, the system again, that out of the 6 buckets, I want only stocks that rank in bucket number 5 or bucket number 6 with regards to ROE. So what we're essentially doing here is we're basically, instead of assigning absolute numbers, we're always looking at relative to the universe. So this principle will never change in any type of environment. Whether we're in a bull market or bear market, it's going to be consistent across the board, where you're always picking stocks that are ranking in that highest bucket relative to all other companies. So if I add this item to report, now we're seeing exactly the screening system do what we want it to do, which is find these low PE stocks that also have very strong returns on equity. So the sky is really the limit with regards to what you can do with this. You can get very, very creative and do this for other types of factors too, like you can use other valuation metrics. You can use a mix of other criteria. You can even create your own criteria. You can, back into the screen by calculation expression, you can take items and multiply them by each other, divide them by another item. You can essentially create your own custom calculated items, just like what we just did here. So again, there is a lot of potential with regards to using Screener here. I was just looking on the CFA Institute, website, the Financial Analyst Journal, and there's a great article here called "What is Quality?" It's a great paper. Highly recommend looking at this. But in here, there are, a number of factors that they talk about, where which adds a lot of value, whether you're a growth investor or a value investor. And you can see here that there are factors like return on equity, debt to equity, variability in EPS, essentially looking for low volatility earnings companies. We've got a lot of these data points. In fact, I just, eyeballing this, we've got all of these items that are available in our various databases that you can use to essentially follow what these guys are doing here with regards to searching for quality out there. So I'd highly recommend you just tabbing through these different databases. It's a lot of it is very self-explanatory when it comes to just knowing what is in our databases. That's pretty much the most important thing. But within our quantitative, ratios database, we have a lot of these quality factors like earnings quality, as well as earnings and dividend quality. All of these items are available for screening purposes as well as reporting purposes. So, and here we have an EPS stability rank as well, which is one of the important factors that this article talks about, which is searching for stocks that have very low variability in earnings over time. So all of these items are available right at your fingertips. Screening is a big, big part of the Zacks research system. And I hope you found value in this presentation overall. If you have any questions, I'd love to hear from you. If you have a screening project that you'd like to put together, whether it is a general universe of companies, or if you want to get super specific and get down to individual stocks to pick, I'd love to brainstorm with you different ideas. I've got tons here that I've saved. I'd be more than happy to share them with you. But if you have any questions, feel free to reach out to me. You can reach me directly through our ZRS support line, which is zrs@zacks.com. Again, zrs@zacks.com. And once again, my name is Meyer. I'm the Senior Relationship Manager. And again, I'd love to hear from you. And if you have any questions, just shoot us an email. I'd love to hear feedback. We hope to have these types of lunch and learn webinars at least once a month. Our target is more frequently than that, but love to hear back on any comments. And if you have any specific topics you'd like us to cover in the future, also let us know about that as well. All righty. With that, I will conclude our session here today. Thanks, everyone.